Listen, hey, welcome everybody. Good morning, good afternoon, good evening, depending on where you are. Hey, it's Lifestyle Focus Friday. I'm your host, Ronco Johnson. Thank you for joining us. This is When the Lights Go Out. Are you ready? Today we got a wonderful episode. We're going to be talking about what is disability income insurance? What is disability income insurance? Why is it important in your overall financial plan? And we're going to be talking about, where you get it, what's the difference between short-term and long-term, and how do you apply disability income insurance in your lifestyle, and why is it important? And, we've had a lot of people coming up and asking about these different things. And, there are so many factors to consider when we're talking about your financial plan, when we're talking about your overall estate health, when we're talking about your lifestyle. Maybe you are home alone and you realize that there's nobody else to help you. If you need help insuring your income, well, listen, I want you to stay tuned, sit back, relax, and unwind. This is your boy, Ronco Johnson, your lifestyle focused wealth coach, helping you to understand why this topic is so important and why you need to stick with us till the end. And I'm sure you're about to learn something new. And I hope that you take your notes, share it with your family, friends, relatives, and business associates, because they're gonna need this help. And we're gonna give you all the reasons and all the scoop of how to do that here in just a few minutes. So stay tuned. I'll see you on the inside. Hey, everybody, it's Ronco Johnson keeping you company this afternoon. It's Lifestyle Focus Friday. How are you? How are you? I'm so happy to see you. You know how it gets on Friday afternoon when the sun is out. It's a warm, nice, cool breeze coming through. Not too hot, not too cold. What are you doing for the weekend? Listen, maybe put some hot dogs and hamburgers on the grill, check some college football out, maybe some pro football this weekend, and even some WNBA action. Who knows? But I tell you now, it's nothing like having your lifestyle the way you want it to be. But today, we're going to be talking about what is disability income insurance. We're going to be talking about a topic that we have not addressed on this program, and I want to make sure that we shed some light to other areas of your financial plan that need your attention. And one thing that I do know from personal experience and from professional experience is that income is important. If you have to replace your income, you have to start to ask the question, who's going to do it? Where is it going to come from? And for how long will you be able to sustain? If those questions resonate in your head, please go to our chat, give me a thumbs up, let me know that these are concerns that maybe you have. And hopefully, if you stick around to the end, I've answered some of your questions just by the podcast. But I want to be able to answer your questions for you because I get that when we talk about anything with the words long term, there is some level of confusion between long term care and long term disability. And we're not talking about Social Security disability, folks. We're only talking about disability income that you will receive if you are not able to do your job. And why is that important? Why is that important? I think we need to make sure that everybody understands those things. But before we get into it, I want to encourage you to do me a couple things. Don't forget to be active today. Be active today in the comments. Be active today in the comments because we want to hear from you. What we are answering or what questions you may have. All of our listeners are wanting to know those same things, right? So we want to make sure that we are able to answer questions that maybe is on your mind. And if you think that it's a weird question, a bad question, there is absolutely no such thing. So we want to welcome you back. I want to make sure that we encourage you to like, subscribe, share, click that notification bell right below. And so you can get all of our updates and know what's going on. Welcome back to When the Lights Go Out. Are you ready? And today we're going to be talking about it. We're going to jump right into it here in just a second. Just to ask the question, have you insured your income? Have you insured your income? And how do you do that? And why is it necessary? Have you done that? And why is that necessary? Well, I can shoot you one straight. I will tell you this. I think this is a topic that is overlooked by so many more people. It is overlooked from time to time. And if you overlook it and it happens to you, it can become a problem. It can be a very big problem. And how do you solve it? That's the question. That's the question. Thanks to the folks over at Ronco Johnson and Associates. And their information is going down below. Ronco Johnson and Associates Insurance and Financial Services is our sponsor. And those folks over there can really help you. Part of our team. They really can help you in answering these questions for you. So if you're catching our podcast, if you're catching us in replay, hey, you might need some one-on-one coaching. You might need some one-on-one assistance. And if you do, don't forget to subscribe here, okay? And keep watching our Lifestyle Focused Wealth channel because we want to be able to provide you content that you absolutely need to hear. Without further ado, right? You're like, come on, RJ, give it to me. What is it that we're talking about today? Well, what is disability income insurance? Let's take a look at an overview of how disability income insurance works and its importance to you, your family, and how it can be an issue if you don't have it. Technically, disability income insurance is protection of your salary. You know, for all of us in the industry, we call it salary protection. Salary protection. Why do we call it salary protection? Because when you're talking about protecting your income, if you were not able to do your job for 6 months or longer, how would you pay your bills? How would you keep your mortgage, lights, water, gas? How would you pay for your kids' tuition to preschool, soccer, dance? How do you maintain your lifestyle? I guess you even have to put in getting groceries in there today because, you know, our economy is changing. It's evolving and it's changing. And hey, interest rates are higher. The cost of living is higher. The cost for goods is higher. We also know that money, cash, the value of it is getting lower and lower. Why? Because it's spending your ability to spend more cash. You're getting less and less of the items that we need when we're shopping, right? Why? Because of the cost of inflation. Inflation is part of that. So if you're living, my question to you is if you're living check to check and every month you're living check to check to check, if you were to have a disability of some sort, maybe you were cleaning your house and fell off the ladder, it hurt your back. Maybe you were in a car accident. Maybe you had just an illness that you could not do. Maybe you're a surgeon or a dentist and you've cut your hand and you can't use your hand, or an artist and you can't use your voice, or whatever your talent may be. In my case, it would be my voice. In my case, it could be my brain, just because of the way we're using it. But if you had any of these different things happen to you, it will cause a loss of income. And disability income insurance is a product that you can purchase outside of work that can replace between 60 and 70% of your income. 60 to 70% of your income. If you're a white collar worker, there's plans for white collar workers. And typically those will cover up to 70%. If you're a blue collar worker, there's coverages for you too, typically up to 60% and in between. So you got to stop and ask yourself, if you're making $100,000 a year, and that is above average, guys, I know the number, but for quick math, if you're living check to check to check on $100,000 and you're barely making it, and you experience one of these types of disabilities, can you survive on $60,000, 60% of your income? Can you imagine? Can you imagine? If you're making $50,000 a year, can you live off of $35,000 or more? Well, if the question that I just asked you makes you a little uncomfortable, you probably need to look into getting some disability income insurance quickly. Why? Because that is just simply it. It's cut and dry. That's why it's important. Because that gap between what you make for a living at your job and the difference of what you will lose if you don't have coverage, there is absolutely no way you can replace that income. I, I can tell people are out there gasping already, right? Well, by purchasing short-term or long-term disability, now that depends on which way it's going to be. Am I going to be out of work for a short period of time? Are you going to be out of work for a long period of time? Are you going to be out of work until you're age 65? Have they said that you have a 100% disability? And when I say they, I mean the doctors. By doctor's note, if they've said that you have a disability, it is too late to purchase the insurance if that's already happened to you. So don't try to go out and buy it if you're already disabled. This is this is insurance that you must have in force before the event happens. Okay, before the event happens. So disability income is known as salary protection. I want to be able to say that on the air, that way it doesn't confuse anyone. Salary protection. We're really talking about protecting our salary. And if we make a pretty good salary, it deserves to be protected, wouldn't you think? Just in case you have a lights out moment. And if you have a lights out moment, we want to be able to replace a portion of it or all of it so that we can continue to live our lifestyle. That is the beginning, the end, and the importance of disability income insurance. I'll give you a few examples as we continue to talk, but I just want to say hello to everybody that's popping in. Hey, Sam, I see you out there. Hey, Donna and Leela, I see you guys. And let me know real quick in the chats if you could in the comments. I just want to hear your comments. So give me some thumbs ups, give me some hearts, give me some shares. And I know that we got people that are watching that are tuning in that are new to our program. So we're doing something just a little bit different. We normally talk about what millionaires and billionaires do. What millionaires and billionaires do. Well, millionaires and billionaires understand the importance of leverage, and leverage comes in so many different ways. If you got a very large income or you're using it in a certain way, doesn't it make sense to protect it? It does make sense. I know we've talked about coverage such as life insurance, and we talk about taking care of your life, but at the same time, we've talked about using it as a banking system while you're living. But what happens if your bank doesn't have any money coming in? What happens to the money in your account? I'm going to venture to say it dries up. I'm going to venture to say times start getting hard. I'm going to venture to say you start asking for help, and maybe you're in a situation where there's no help available. Maybe there's no help available. Maybe you live a lifestyle that's above the means of other people in your family. Maybe even out of reach for your friends and family to help. So, would 60% replacement of income be important to you? I think that would be. We're going to talk about short-term and we're going to talk about long-term disability and how you compare them and the benefits of them. Short-term and long-term disability policies are two different things. Typically, short-term will be anywhere from 0 to 90 days that you're going to be out of work. Long-term disability is going to be between 90 days on up until probably 65, meaning you're not coming back to work or you're not doing that function any longer. It is okay. There are some different types of short-term and long-term disability. So, a lot of the ladies are familiar with a short-term disability when they are out of work for pregnancies. These things are important. It helps to maintain the lifestyle. It helps to maintain the household. It helps to keep the lights, gas, water bill on. But long-term, a couple things happen. When you go on claim with disability insurance, it's important to know that you're not able to do that function, that job, anywhere else. So whatever that job is that you use your superpower for, you're supposed to be disabled. So what can you do? Now, in instances, depending on the type of plan you have, depending on the type of coverage that you have, you can have a disability insurance pay you, and you can probably change the career path. In other words, again, if you were a dentist or maybe a surgeon or something like that, and you cut the vein in your hand, you no longer can hold your hand steady. However, but you still have the mental capacity to say, sell real estate. You could change careers and still earn a living, but you're earning a disability for the fact that you can no longer be a dental expert or a surgeon or whatever that job was. Just picking on those industries right now. That's just what comes to the top of mind. That just comes to the top of mind. So, but you have to make sure when you sit down with your financial professional that you go over the riders on these plans. Every carrier has a different scenario. So some of these plans do not allow you to go and find another career. So that's not an option on every policy. You have to request it. So when you're sitting down talking to your advisor and you're going through it, make sure that your disability plan allows you to have a different occupation. It's either own occupation, that's what they want to know, own occ. For you insurance professionals that are on the line, you understand what we're talking about. Before you folks who are consumers, you want to know, is it your own occupation or not? You can't do your own occupation. You can receive coverage, but if I can go somewhere else, I can continue um, doing a different type of career. I can earn money somewhere else while earning disability insurance for not being able to do my own occupation, my original occupation. Do we have any questions out there in the field? I know we may have some as I'm going. I just want to be able to talk about that. And it's not a very long conversation. It's pretty straightforward, if you ask me. It's so straightforward that I almost don't understand why we don't just have it. And in our questions, in our focus groups, in our one-on-one sessions, one of the conversations that we have with our team and our students is, do you have long-term care? Do you have short-term disability? Do you have long-term disability? Long-term care is totally different. It's totally different. It is not long-term disability. So I don't want you to be confused and think that you have one thing when you really have another. I'm looking at our comments that are pouring in right now. Somebody said any percentage works for me. Yes, that's kind of how that works, right? When you live in check to check, any little bit helps, right? Exactly. That's exactly what we want. We want to make sure that you have that part covered. So if you've experienced a disability and you're not able to do your job, you will receive income. Now, let me explain the difference let me go back just a second. One important detail is the difference between having disability at work and purchasing it outside of work. So get your pens ready for this one. Get your pens ready for this one. And by the end of it, remember, part of Lifestyle Focused Wealth and part of what we do, why we're so significant here, is because we're not just talking about one product or service. What we're doing with our Lifestyle Focused Wealth philosophy is showing you how to intertwine all these financial products and services together so that they work. The better you understand what that product does, you can start to see it better for what part of the puzzle of your estate plan or your financial plan that it supports. And if you can see the biggest picture, the big picture, how does that fit in my estate plan? Meaning, how does that work with my real estate? How does that work with my income? How does that work with my insurance? How does that work with my mutual funds? How does that work with all of these things? Well, we're about to explain that, because you can't just have one piece of the puzzle. Just imagine, I want you guys to just visualize, we're doing a jigsaw puzzle, and it's called your estate. That jigsaw puzzle has many pieces to the puzzle. And you might be able to put all the outside corners together, but it's not a perfect picture until you take every little piece and put it together. Once you are able to take every little piece and put it together, then you start to understand the importance of that piece. Can you imagine almost done with a jigsaw puzzle, and in the center of the puzzle, you were missing several pieces? Maybe it's a picture of your face and you're missing 7 pieces. You got everything else. So it doesn't matter that the outside is perfect. It doesn't matter that you can see it, that in the picture is a sunset. It doesn't matter. The picture is incomplete until you find those several pieces of the jigsaw puzzle. And then once you find those 7 pieces of the jigsaw puzzle, it's important to figure out how it goes into the photo. Because if you turn it the wrong way, it just doesn't fit. If you put it in the wrong area, it just doesn't fit. Well, I need you to think about disability income like this too. Because without your salary, you have no income. And without your income, you can't put it in your infinite banking system. Without your income, you're not going to the bank and getting a loan. Without your income, you're not having a brokerage account and buying up shares of stock in most cases. So if that income were to stop, how significant is that to your plan? If you had disability insurance, that might be very important for you because you have money coming in to support you while you're out of work. And if you have to change careers, you have income coming in to support the gap of income missing while you're pursuing a new career. But when you buy it at work and you sign up for part of your benefits plan at work, you do need to know this one big thing. If your plan is replacing 60% of your income and you do it at work and your job is participating in paying a portion of your plan, your tax benefits, your income benefits are taxable. I need you to hear me. So if I'm making $100,000 a year and I go on claim, now I'm receiving $60,000. Let's just say that $60,000 is now taxable. So if I was in a 28, 26% tax bracket, plus my state and federal, let's just say I paid 33% of my money up front on $66,000. Well, that's not exactly 60% of my income, is it? I'm probably bringing home about $48,000, somewhere around in there. Yeah, don't kill me on the math. I'm just talking off the top of my head, but I can tell you this: it's not 60%. Don't forget, before that, you needed 100% of your income to live. Are you guys catching my drift? If you're catching my drift, let me know. Let me know down in the comments. Don't forget, tell a family member, tell a friend that you're here. Tell them that you're talking about it. If this is interesting to you, put the words interesting down in the comments. Did you know that these benefits are taxable if you have it at work? For all you folks that think your work benefits are your retirement plans at work, you might want to reconsider this, because when you buy disability income insurance outside of work, one of the biggest benefits is it's tax-free. I said it, it's tax-free. That means that if I am on long-term disability, now I'm receiving, if I bought it outside of work on my own, and my job did not participate in paying it, and I paid the premium, right? Again, if I make $100,000 a year and I'm paying my own disability income insurance, guess what? You're receiving 60% of your income, tax-free. Now, that's a big deal. That's a big deal. So if you're having support from your job, I just want you to know that that benefit, if it's at work, it is taxable income. So you may be getting 60%, but then that income you receive is taxable. When you buy it outside of work, that income you receive is tax-free. So that's the biggest difference. So between 60,000 and say 38,000, there's a big difference. There's a big difference. Well, one of the questions someone's asking me, what about that $22,000 gap? What about that $22,000 gap? So if I happen to have it at work and I get taxed, there is insurance out there when you sit down with your advisor where you could just purchase enough to cover the gap that you're not receiving. That $22,000 that you would be paying in taxes on that money, you can still get coverage on it. Just sit down with your advisor and have them put it together so they can explain what options are available to you. These options are important. They're important. They're important. Because if you did not know that these benefits are taxable, you're going to have a shortfall. And it could get a little bit uncomfortable for you. But if you plan it properly, you can make it through those challenges. Is that all right? Am I making sense to everybody? Please repeat. Please repeat. If you're working and you are taking part in disability at work, your company is participating in the payment of that plan. And if you go on claim, those benefits are taxable as income to you. Which simply means this. If you were expecting 60% of your salary, now you got to pay taxes on that 60%. And when you pay 60%, when you receive 60%, you're already behind. So if I got to pay taxes on the 60% I received, I'm even further behind. Therefore, I'm really getting about 40, 45%, maybe 43%, depending on what tax bracket you're in and how much money. I don't want to get too deep in the woods, but I can tell you this, it's not 60%. And a lot of people out there pass up the opportunity to sit down with their insurance professionals because they think they have this coverage at work. They have that same problem with life insurance too. Usually someone throws their hand, oh, I got it at work. Not understanding that when you reach a certain age or when you retire, that benefit goes away. It's not transferable. It doesn't stick with you. Any insurance on the life insurance side of it, you don't build cash value in those things. So it's not an asset. It's just it covers that for final expenses. So you could be losing out on time. You know, when we talked earlier, we talked about the availability of time and why that thing is so important. Why time is so important. Why is it so expensive? Because if I worked for a company for 25 years and I've been paying into this benefit for 25 years, and I didn't know that when I get of a certain age, they're going to take it from me. If I did not know that, I just wasted an awful amount of time. Incredible amounts of time. If I knew that I had opportunities to let my cash values of life insurance build up over 25 to 30 years, and I could be receiving a tax-free dividend, I've lost a lot of time. Why? Because I was improperly educated. And I can't even say improperly because it's not the job's responsibility to make sure you understand all this stuff. Why do you think they make you do it on your own? You know, you're buying mutual funds. You don't have a financial advisor there. You don't know the difference between equities and long-term and short-term. And you're just buying stuff because somebody said so at the water fountain. And we wonder why we have a United States full of what I call financially deficient people. Because we're following one another, and when the blind is following the blind, you can't expect the results to be any better. Am I making sense? So please make sure you understand this. Hey, listen, if you understand exactly what I've said, put it in the comments. I want to put it in the comments. That way, here's why I want you to be active in the comments. Because if you can repeat what I just said in the comments, I know you got it. And I also know for those people who are watching this in review, If you're watching this in review, it says it right here in the comments. So do me a favor, go to the comments, read it. It's saying, hey, if you have benefits at work, it's taxable income to you. So if you're receiving 60% and you have it at work, that's taxable income. If you purchase it outside of work and you sat down with your own advisor, you sat down with your own financial team, and you purchased this particular product, it's tax-free. The benefits are tax-free. So if you understand what I'm saying, put tax-free benefit down in the comment. Just put that tax-free down there. Outside of work, tax-free. Outside of work, tax-free. Okay? And then we got to make sure that the plan has our own OX statement. We want to make sure that the plans have information that allows us to move on to a new career if we're no longer able to do the one that we currently have chosen. So you want to make sure those benefits are there. All right. Has this been helpful to you? Has this been helpful? Is this different for you? Is this good information that you get it? I get you, Sam. You say I overstand. I'm just making sure that we take our time on it. We got to take our time. Got to let it resonate with some of us, because too quick, we're all throwing our hands up and we think all insurance is the same. Just because it has the same title doesn't make it the same, because the definition of each one and what it is, and how it's built around your personal situation makes all the difference in the world. Disability insurance is also a customizable type of program. So it does not do the same thing for everybody. It does not do the same thing for everybody. So please, if you need some help with that, if you need some assistance with it, even if you want us to review it and make sure, I'm going to ask you to give us a call down at the bottom. Give us an email. Send them folks over there. And you can even ask to speak to me if you like. 770-321-1337. And they can answer those questions for you. And I want to throw out another scenario. And this was a real scenario before I go to break. We got just a second before we go to break. Let's just say we had a person named Bob. Bob, he was making $50,000 a year, and he bought disability income. He bought disability income insurance, and several years later, he quit his job. He bought it outside of work at $50,000. Left his job. He left his job because he got another opportunity to make more money. And because he was making more money, now he's a six-figure guy. Because he had the disability insurance, Bob didn't think about it ever again. One day, Bob's outside cleaning his gutters and unfortunately falls off the ladder, breaking his back, and needs 60% of $100,000 of income. Well, there's a good and a bad to this story. The good thing is he did have coverage. The bad thing, he only covered $50,000 because he only got coverage when he was at his first job. He didn't go back and renew and upgrade it. He didn't make the changes to his plan. His plan didn't change with his elevated income in his lifestyle at the time. So he was receiving, instead of 60% of 100,000, he was receiving 60% of 50,000. Now that's what I call a lights out moment. That lights out moment meant that he had to sell a couple cars, sell some assets down, just so he could live the lifestyle that he needs, or that he needed to live. So also just remember, if you take nothing away, put this in the takeaways. Renew your plan. Simple as this. Renew your plan. When you go up in income and when you go up in salary, you need to go back and revise your plan. You need to make sure it's consistent with what you're making now. Now here's a reverse story. Susan was a hospital nurse making about $100,000 a year, and she had this ability. There we go. I think we're back. I think we're back. So for those of you that can see me, that are still in the queue, give us a thumbs up, okay? Sorry about that. I think we just had the little technical difficulties, but let's go back to Susan. Susan was making $100,000 a year, and she was a nurse that actually she decided to go into teaching. So she took a little bit less income because actually she'd done really well, 30 years as a nurse, and so she took a little less income. And again, another tragic situation where she had a car accident and was not able to do her job. Well, let's just use the same numbers. Let's say Susan was making $50,000 a year as an educator, where she once was making $100,000 a year as a nurse. But because she bought the coverage outside of work while she was at work, she didn't renew her plan either. But she was able to get 60% of the $100,000 because that's what she's been paying the premiums for, tax free. because she was making more money at that time when she bought it than the job that she was at the time of the event. So it can work both ways. Moral of the story is make sure that you have the opportunity to get coverage and review your plans. Because if you can review your plans and make these adjustments, you can avoid some of these circumstances that happen. And that's why we want to make sure that you're part of our lifestyle focused wealth community, because everybody that's in the room has these concerns. And you need to be in the room too. Hey, join our lifestyle focused wealth community. Membership starting at $16 a month when you pay the annual subscription. So register online today at www.lifestylefocusedwealth.com. Yes, everybody, we're back. Hey, listen, you need to become part of our lifestyle focused wealth community, because everybody in the room is taking advantage of what millionaires and billionaires do. And we want to make sure that you're leveraging just like everyone else. We want to make sure we're taking care of those little bitty details to complete the picture, to complete this jigsaw puzzle that we call your estate plan, and avoid these lights out moments. That's what we're here for. And if you're having a lights out moment, if you don't have it, you're having a lights out moment if you're delaying getting it. Let's take care of our business from top to bottom. So let's talk about how this thing plays together in everything that we do. You want to know more about how to apply? Go to lifestylefocusedwealth.com, or just go to roncojohnson.com and schedule a one-on-one meeting with me, and we can get that set up for you and get you to the right people, and hopefully we can design something that's perfect for you and your family, and help you understand what disability insurance is all about, the benefits, what the income replacement, the benefit periods, the elimination periods. There's so much that you need to understand, but it's not hard to do. We just need to understand what limits that we're going to replace. How much money did you make? And what period of time do you want to start it? Do you want to wait 30 days before you get paid, or 90 days before you start getting paid? What's the elimination period? We want to know those things, right? We've already talked about the biggest disability insurance and in employment, how it works when you're covered at work or when you have supplemental coverage outside of work. One is taxable, one is tax-free. How do you want to make it work for you? And if you have one at work, can you get another one outside of work? Yes, you can, and fill the gap. So you don't have to pay a big premium. There's so many options. But it's sitting down with your advisor is so important to do. It's so important to do because all these details matter. So these details matter. So if you want to know how to apply for this type of coverage, click down below, roncojohnson.com, schedule some one-on-one time with us. I'd love to sit down and talk to you about it. I love talking to any of you. You can even call me over for your barbecue and your picnics. If you invite me, I might just show up. I might just show up. I'm a big guy. I like barbecue, right? So do we have any questions out there in the comments? Do we have questions out there in the comments? Some takeaways? Hey, tell me what you've taken away from this conversation. This is a different conversation than what we've had on Lifestyle Focused Wealth in the beginning and then tonight. So we want to make sure that this is information that's holding your attention, because we know some of you guys just be flipping through. We don't want you flipping through the channel. We want you sticking with us. We need you to stick with us. We need you to tell someone. We need you to share us with someone. We need you to be part of our lifestyle focused community. We need you. We do. I want to see you there. I want to see you there. Hey, listen, how are you doing on your goals this year? We're in the fourth quarter. Yes, the fourth quarter. If you can hold up the number 4, we're in the fourth quarter of the year. Hey, listen, if you've been focusing on your business, if you have been focusing on your lifestyle over the last 8 to 9 months with us, you should be ahead of your goals. And if you're not, we need to turn up the heat a little bit more. We need to turn up the heat just a little bit more and keep pushing. Stay focused. Stay focused on your plan. Don't let someone or something get us off our plan. Keep working. Keep striving. Keep learning. Keep putting information out there to your family and friends. Keep learning. That's the key to this. Keep learning. And once you learn it, don't act like you didn't learn it. Don't go back to doing bad habits. Once you learn it, apply what you've learned. Start applying it. See, let me go back and share with you before I took that little bit of break. I was going to share with you how this disability income insurance, if you have it and you went on claim, it works with the other things. Meaning, if I was still receiving an income, if I'm still receiving an income, I can still purchase property. If I'm still receiving income, I can still purchase an LLC or a corporation. I can start a company of my own. No, maybe I can't use my hands, but I can use my brain. And because I got the right type of disability insurance, I can still receive my disability benefits and I can start a new career and maybe employ other people. See, if I'm able to do that, I'm still able to buy life insurance. Yes, I have a dis if I have a dis if a person were to have a disability, it doesn't mean they can't get life insurance. It just means that they're not able to do their job. Life insurance means it's something more critical, right? And if I'm able to generate revenue, I'm able to still put money into my infinite banking. I'm able to buy stocks, bonds, and mutual funds. I'm able to purchase real estate. I'm able to use all these different things and leverage so that my lifestyle is still fantastic. And that's what our goal is, to make your lifestyle fantastic too. If you like that, give me 2 thumbs up. If you like that, give me 2 thumbs up. See, it doesn't have to be gloom and doom. We got to look at real life circumstances and start to think about, okay, well, how can we take something that is a lights out moment for most and turn it into brighter days? How can we make that a bigger focus? How can we turn that into a positive situation, right? These are the reasons why you need to join our Lifestyle Focused Wealth community. I just can't say it any more than that. Why? Because you need to be part of a lifestyle focused group of people that already are taking advantage of what billionaires and billionaires do, who's already talking about this stuff. And by the way, if I've started a corporation, many of these benefits are tax are part of your business expense that we've talked about. Meaning, so if you have a business, you create a business and you're paying a premium to an insurance company, Section 162 of the tax code says, hey, this is a business expense. Might want to look into that. See, that's how all this stuff gels together. See how I put those extra pieces of the puzzle back into the frame? And now it's not a separate thing. It's a completing item. It's the items that complete your focus, your lifestyle focus. Make sure your picture's complete. That's what I'm saying to you today. Make sure your picture is complete. All right. So I don't want to miss out on a chance of helping you reach your financial future and control it. So, do me a favor, book your consultations as soon as possible. Do that. Do that. I'm loving having the conversations with you guys off camera, and I'm loving it. We want our community to keep growing. We want our memberships to keep going. We want our subscriptions to keep growing. So do me a favor, make sure that you tell someone that you're visiting, that you're hanging out with us every Friday, 1 o'clock. Every Friday, 1 o'clock. And if this segment moved you a little bit, do me a favor, share it with your family and friends. Send them an email with the link to it. Maybe they'll appreciate it. Maybe somebody's going through something. And this little bit of information could be your way of helping them out, giving them access to information that can change their life. That's a gift that keeps on giving. I have to say, I'm looking for gifts that money can't buy, gifts that keep on giving. They make more sense to me. Well, listen, I'm looking for our comments. I'm looking for more of our comments. 1 in 6 people. Let's see. What Mr. Johnson, what did you say? Love your last name too, brother. 1 in 6 people experience some form of disability. Hey, that's a very, very, very true statement. It's a true statement. So if you're in a group right now of 6 people, just look left and look right. Out of the 6 people, somebody in that group is going to experience some type of disability. And I see you, Ms. Wilson, you're talking about leverage. Yes, we want to leverage. We want to leverage your insurance, pay the premium, because I tell you now, somebody said to me, the cost of the premium is too high. I said, well, how is it more valuable? What's more valuable to you? If the cost of the premium is too high, how costly is it to not pay a premium at all? Crickets. Listen, folks, we got to stop. We got to stop counting the dollars. Remember, dollars are tools. We need tools. Dollars are tools. Cash is a tool. We need the tool so that we can use this tool to create more leverage. Without the cash as a tool, we can't earn any additional money. You can always use your asset as leverage, your house, your stocks, your business, as leverage to earn more revenue. But you need cash. So stop spending your cash first. That first round of cash, we need to be saving. And then we need to be learning how to use earnings for our purchases. We need to also start looking at the tax code and understand the tax code. We need to start understanding that there are benefits in owning businesses, even the small ones. These benefits are available to you. So if you're looking at retirement and you're getting closer and closer to retirement, or you got a healthy income, but you also have a healthy income tax bracket, contact me. Let's see if we can put a solution together, a strategy together that can help minimize some of the taxes that you're paying and get you ready for your next lifestyle. How important is that to you? But if you don't prepare for that lights out moment, how costly is it? Hey, that's my time. That's my time today. Hey, listen, I hope I gave you some things that make you say, make you say, If I made you say, you can put that down in the comments. I love to say that. But listen, I want to wish everybody well. I want you to be safe. I don't want you to have a lights out moment while we're gone. I want you to be able to join us next Friday and have more of these kind of conversations. And hopefully, we can start to see people change their habits. And I would like to see you send me an email or make some more comments and talk to me about how this little bit of information, these details, and staying focused on your plan has helped you become more and more and more successful, right? And that's what we want. We want to hear your success stories, because everything that we do is important. If we start focusing on the things that are important, the things that are guaranteed to happen, we know that we have a start date and an end date, and it's somewhere in between. We're going to get sick. We could get disabled. And somebody said earlier, if you got disabled, maybe you're not fortunate enough to die. Well, I don't know about that, but there are people who have to suffer with an injury for the rest of their lives. And this is an important situation that we have to talk more and more about. We need to make ourselves more and more aware, just in case. Hey, that's my time. I'm your host, Ronco Johnson, your lifestyle-focused wealth coach. I'm looking forward to talking to you next week at this place, same time, same location. And I will see you next Friday. If you got something good happening over the weekend, let me know. If you got that barbecue going on, let me know. If you're close by, I would like to hear from you. I have nothing to do but have fun. Hey, listen, I will see you next week, 1 o'clock on Fridays. It's your boy, Ronco Johnson, keeping you company while everybody else is at work. I will see you next time, and I look forward to talking to you soon. God bless, and we'll see you at the top. I'm Ronco Johnson. See you next time. Bye-bye.